All right, guys, welcome aboard for this intraday strategy webinar on SB Trade Desk. I want to take a quick minute and go through some of the last setups that we've been following. We'll also go through the current trades that are in play. As always, guys, feel free to throw out any questions, trade setups you're looking at, or any questions on the strategy that we've been working with here. Pooja, Parmendra, Dale, Eileen, Petro, Jonas, always great to see you guys. Welcome this morning. Okay, so happy Monday to you too, Eileen. Petra saying, hello, Michael. I wanted to ask you if with the new low in the euro dollar for the week, does that mean that the break of the opening range is to the downside? We'll take a look at the euro dollar for sure, Petro. Give me one moment. Let's just go through the setups that we've been highlighting here on the intraday page. So guys, again, some quick housekeeping here for those of you who are newer to the site. The intraday page is where you'll see those updates throughout the course of the day. I will tweet whenever there's a major update put on the page. The report section here, which also gives you the most recent ones right here, will be highlighting major key or the broader setups on a scalp-by-scalp basis. So it's going to tell you not only the broader setup on the daily chart and the intraday chart that we're looking for, but it'll also give you all the scalp targets right at the bottom in that intraday levels page. So keep that in mind as you're going through the intraday charts here. Also, one thing with regards to the swing trades, guys, if you've been following Jamie's setups as well, they're currently holding a nice position right here on the pound. Long story short, I want to say to you is you got to remember that these are based, a lot of the analysis that we do here are based on trend lines and slope analysis. So when you're looking at something like that, guys, on a medium-term trade strategy, you got to make sure that as the time progresses, your targets on the downside change or on the upside change as per the slope. So, for example, the only reason I say that is because the British pound position that we're in right now, we're looking for that 53 level because right now, if you look at the daily chart, that's basically where this pitchfork resistance is, or this upper median line parallel, right on that 53 handle. As we move into tomorrow, that level will be pulled in as the slope gradient continues to move lower. So just make sure you're being dynamic with those targets. That being said, let's jump right in. So on the intraday trade setups, first thing we've been following is obviously the dollar-yen. Swing setups are also currently still holding that short in dollar-yen. Here's what we've been looking at as we closed out the trade yesterday. The 118.17, 118.04 barrier is still the support barrier that's in focus. Now, in overnight trade, we actually did make a run below it. If you were nimble enough, it would have gotten you the 30 pips that you needed, suffice there for the scalp. But obviously on a quick reversal here, I wasn't involved in this play. But long story short, this is still the support barrier that's in focus, okay, and remains in play right now. The broader picture still looks to be holding within the confines of this nice descending Andrews pitchfork off the highs here. And, we really would like to see another break below that median line and push below that 118 barrier to open up those southern targets. You're looking at 117.55 as a nice confluence region here, 618 retracement off the low, and a 618 extension off the high. Okay, and then right on into the 117 barrier, which is what the swing setups are targeting. We are heading into some major U.S. data later in the week, guys. CPI data is likely to be pretty big. If we do see CPI continue to soften, you're likely to see some of those expectations for Fed interest rate hikes start to soften as well, and that could give us a little bit more dollar weakness. Obviously, University of Michigan confidence comes in towards the end of the week as well. But with this yen, I really haven't done anything since the initial rally that we saw here early in the week. We want to see either let me take a step back. As it stands right now, Petro, for an example of the weekly opening range, this is what I would still work as the weekly opening range. I'm not going to stress this too much because you didn't get any candle closes below here. And if we bring this into a daily chart, this is what we've been highlighting since last Thursday, right? And that 50% retracement at 118.18, the stretch low is at 118.04, and that's still the basic region of support that you're looking for. So we need a close below this to open up the hatch here, and we'll be looking for a move into the 117 handle. All right. As it stands right now, shorts above this region are at risk from a scalp standpoint. We want to look for our rally as close as we can back into that 119.24 level to get back short. Or, like I said, a break below 118 here opens up those southern targets into 117.55 initially, then 118. questions on the yen. The momentum signature, as we look at this thing, guys, still remains pretty bearish, despite the pop that you got above 60 here early in the week. Here's your 40 break, 60 hold as resistance. Again, we'll use the 50 break here as a trigger. We'll use a 40 break here as a trigger, looking for that move, sub 118. Leon says, where are current trades posted as they're made? I see them referenced after the fact, but not posted real time when made. Leon, which one are you talking about? The scalps, or are you talking about the swing trades? So, guys, the scalp trades are not going to be posted trade by trade. It's just not feasible, and there's no way I can effectively do that. I put out for you guys a lot of different scalp setups throughout the course of the week. There's no way I can personally take all those positions, guys, because a lot of these trades are panning out in European hours, in Asia hours. So the reference points are there. These scalp setups, guys, are very versatile, okay? And the reason we don't put out a trade-by-trade setup is because a lot of different ways you can play this. On this rally here, there are some guys who are looking to sell at this high, looking for this target down here. There are some guys who are long with this break, looking for a close up here. They're very subjective, and we can play them a lot of different ways. So on the scalps, the levels are there for you to use. The biases are provided. The invalidation levels are provided. And again, every person is going to use those levels, in a different way. From the swing trade standpoint, obviously the swing setup every day that you'll see under the swing trades here in the recent posts is where all the entries, orders, stops, and limits will be placed. Okay, and again, we won't necessarily always give you, hey, this is happening right now, we're getting in, because some of these pan out at night, Leon, overnight, where it's just not feasible for us to be able to actually, be there when it happens. So as far as these are concerned, these are trade setups where you can actually just place in the order if you'd like. Again, we do want to keep in mind, guys, that you can get a lot more benefit out of this analysis by other than just plug in these numbers. You're more than welcome to do so if that's the way you want to trade, but there's a lot more opportunity than just the levels that we give on entry, exit, and stops. So hope that helps, Leon. Eileen saying, also this morning, can you go over your entry details again since last week's wasn't recorded? I know, right? We went over all the scalp triggers last week. Unfortunately, that session didn't record. Eileen, remind me again. We'll see if we can delve into something a little bit deeper here. Fernando says, I want to move the dollar-yen stop to last night's high. What do you think? Okay, here's the only thing I want to say on that. To be blunt with you, Fernando, I'm completely comfortable with that move. Completely comfortable with that move. But here's the one thing I do want to just keep in mind for everyone here in the room. You have to really make a decision, guys, when you're putting on these positions on whether you're putting it on as a swing basis or a scalp basis. Because if you start using both of our strategies combined, you can, alter the broader performance. If you have the NFP entry, okay, from Friday, remember, we closed out most of those positions as we came into 118.70 right ahead of the weekend close from a scalp perspective. Obviously, we're much more heavily leveraged on the initial entry. So for us, as we came into these targets, we continued to chip off, the core position. If you have that entry, you might want to be a little bit more relaxed with your stops. Don't bring them in too tight, Fernando. If you're scalping the pair and you have the entry, from this week, yeah, absolutely. Last night's overnight high is exactly where I put that stop. Right? So just keep in mind the discipline that you're trading on, so that we make sure we're keeping an objective look at what we're doing in the near term. So Fernando, I hope that helps, man. You're really banking on a break of 118. I think you get it. I think we might just chop around here for a while, maybe even go for a test of this upper median line parallel before we do. But at the end of the day, we're still maintaining that short side bias. Fernando says, thank you. More than welcome. Okay, so that is the dollar-yen. We'll continue to track that. I want to see that break sub 118 once we get it. I think you'll get that drop towards that 117 handle. Next up on radar is the Aussie dollar. This one was updated last night as well. Remember, we're still continuing to favor the short side here on the Aussie near term. I do think inevitably this is going to give us another pop. But near term, from what we saw in the momentum yesterday, from what we saw with the false break and pullback back below the 82 handle, you want to stay bearish below this median line bisector. When you look at my charts, by the way, guys, the median lines that are dashed are proposed median lines. It means we might not quite have enough data to suggest that that's the operative trade. Okay, overnight proved that it was, with a rally right back into the median line resistance, and we came right back off again. Here's what Aussie dollar looks like right now. So again, just a reminder, I try to keep the biases as clear as possible. So the scalp bias remains weighted to the downside sub 82.13 with a break sub 81.16, the median line targeting the objectives into the monthly low. Here's what the Aussie looks like right now. Okay, so there's that rally right into the median line. That reacted again. Remember, this is our near-term bearish invalidation level. So right off the bat, you're coming into here looking for short exposure. Guys, look where momentum peaked. Right at 60. Right at 60. Okay, so even if you didn't get the entry right into the 82 handle, or 81.95 rather, on the rejection here in momentum of 60, reversal candle, even if you had taken it from 81.80, stop against that 82 handle, you had a nice play to the downside. Remember, on this one, we're only looking for about 20 pips per scalp. It's still pretty tight as far as the ATR range is concerned. Near-term support, and the support that we've been focused on, like I noted yesterday, in that piece, is really going to be that 81.16 level and the median line that we're looking at here. And that's this region right here. 81.16 represents a 618 retracement off the high. Here's your lower median line parallel. And here's a proposed median line as well, guys, for the near term. Okay? Saw some resistance here, break, caught the bottom, almost a couple pips away here. But we'll see if that median line, which now coincides with this key area of support, gives us the break that we need. And if the break does happen, guys, on a trade like this, you're likely to see it fall apart pretty quick. Okay, initial targets will be right back into 80.80 and 80.30. Keep the daily chart in view. And remember, on the daily chart, the broader picture, it was really this major support barrier that we rebounded off of last week. Okay, so as again to 80.67, 80.65 here, you want to make sure you're cleaning up some of those shorts if you're scalping on the short side. Questions on the Aussie. Still remaining bearish below 82. You want to be selling rallies. You want to be selling a break of support here, as long as we stay below that 82 handle. You even have a support trigger right now. It looks like it's still pending. Right there. So Eileen, when we use these support and resistance triggers, most of the time, guys, you'll hear me talking about a trigger that puts us into a trade, a trigger that prompts us to take action, right? But these triggers can also be used to tell you when you want to get out of the trade. And this is why sometimes you'll see me put resistance triggers, even if we're looking for the short side of the trade. Again, there's nothing magical about these oscillators. They're all backwards looking, but on its face value, this is something I pay attention to. If I'm holding a short in the Aussie dollar and I see a resistance trigger break to the upside, it might not necessarily prompt me to take out the entire position, but definitely take something off the table, bring stops down. Okay, so we want to, these are here for your benefit. Again, we're just looking for a graphical representation of a shift in momentum. Remember, this is following price action, guys, so it's not really telling you anything different. We're just looking, like I said, for a graphical representation of a shift in momentum to give us that trigger. So Aussie, bearish sub 82, looking for a break sub 81.16. Okay, moving right along. From the Aussie update from last night. Next one up, Sterling CAD. What a beauty, guys. This one has been, well, first of all, it's a very wide range scalp, right? Because you're looking at a quarter of the daily ATR still yielding somewhere in the range of 35 pips. Now, truth be told, guys, the ranges that you're getting are well over 35 pips. So if you're scalping the Sterling CAD here with me, leave yourself some room. Leave some breathing room on the limits, on the stops. It's been performing very well. We're getting a little bit tired here as we ran into that 618. You did get a near-term pullback, but the broader trade still looks like it's pretty constructive here. Very similar to what we're seeing in Sterling Oz. Jonas, I saw your tweet earlier this morning. So we'll definitely take a look at that as well. But here's what we're looking at currently with Sterling CAD. So if you guys recall the report from last week, I tweeted this also on the on SB and on MB4X on this one earlier this week. So the as we came into the 78.60, 78.50 region, we were looking for a low. We suggested that, listen, this is your area of risk. Okay, even if that low breaks, you could find support right at that lower median line parallel. You had a nice pivot at 177.81. Long story short, really nice rebound, right? Really nice rebound, taking you well through all the topside objectives that we had noted in that report. Near-term resistance at 81.55. It's an exact confluence with the 200-day moving average at this point. And although we closed above it, you know, you're weary of really trying to get aggressive until we get through this region. This scalp has held up extremely well. Extremely well. Here's what the scalp setup looks like on Sterling CAD. All right. So there's where we were when we updated, you know, the intraday charts yesterday. We were pushing right into this 81.55 barrier. You didn't get much of a downside trigger, so I wouldn't have played the counter trend move here. If anything, guys, this is what I would have played on this rally here. Momentum coming right into that trendline resistance holding. You have a very tight stop against the highs. You're looking for 30 pips. You got well over 30 pips on this drop here into 80.67. So pick and choose your battles, you know, based on the most efficient and the most effective signal. Obviously here, this was in the wee morning hours, so I wasn't able to get involved here on the open of European trade, but this, out of this decline, is the only position I would have taken on this setup. Here we are testing that median line resistance. That's holding as resistance here. Actually, this would have been a decent trigger here as well. With a reversal candle stop against the highs. Initial targets you're looking for 81.23, and then right back here. Watch this median line, guys. As long as we stay above this, you don't want to turn over on the broader bias that we've been working with. Counter trend works here. Near term, just on the hold and momentum here at 60, and the fact that the weekly opening range continues to, or the weekly highs have continued to be respected here on this last stretch. But we remain constructive well within the confines of this ascending channel. Really, I mean, depending on where we are in time, as it stands right now for today, you would need a break sub 80.70 to get back on the bearish camp for the broader trend or the medium-term trend. That being said, you're still looking for pullbacks here to get back on the long side. Questions on Sterling CAD. I see a lot of questions coming down the pipeline here about triggers, RSI, and the 5-minute. We'll take a look, guys. We'll definitely look into it. I just want to get everyone a broader view of the major setups that we're following here. So, again, watch that 81.55, that key 618 we're looking on the daily chart. If you see a downside break below 80.80, I would like to start shorting on the scalps here. Inevitably, we're looking to buy that, but at the end of the day, the reversal that we're seeing on the daily chart here, where is it? It's pretty impressive. It's pretty impressive. All right. I guess from here we can take a quick segue into Sterling Oz for you, Jonas. I know that you're involved now with Trade 2. Very similar, right? Very similar to what we're seeing here in Sterling Key, although not to the same degree. But nonetheless, the 40 bounce here in momentum, keeping the broader upside trade or the broader upside bias in play. You had that trend line support off the lows from September. Really interesting on Jonas. You know, on this one, I mean, 85 or 86.50 break, excuse me, would have me looking back at the 88 handle. The issue with this is the Oz from where we are right now. I mean, you need some serious weakness from here to get this pop over 86.50. You know what? On this one, let me check out what the intraday chart looks like for you, Jonas. Since the start of the week. So remember, we were all over this, guys, over the last couple of weeks on the short side of the trade. But that rebound that we just looked at in the daily chart is what shifted the focus back to the upside. At this point, I still think you want to maintain a near-term constructive strategy, but it's this region here that we really do need to clear. on a closed basis. I don't know, Jonas. It's not my favorite setup at this point. I still think that the sterling CAD's a little bit clearer. If you notice, I actually didn't include sterling odds on the intraday charts this week. Kind of fell out of focus with it after we made this break, and we fizzled off really quick. So I kind of haven't really had it in focus, but I'd be watching the Aussie. I'd be watching the Aussie on this one. Yeah, not the most compelling. He says, I think it's a little stretch to the upside as per now. For the sterling Oz, could be. I mean, obviously, well, let me take a step back as we walk through this. This is a position I would have been interested in. Okay? Remember, 9 times out of 10, I'm going to take these guys. 9 times out of 10. You have divergence into the highs, followed by a trigger break. Now, this is not the most compelling trigger break, but the 60 break in and of itself would have been a good trigger. Okay? I wouldn't necessarily even stress this slope. I would have just taken this trigger. Why? A, you had a reversal candle, and B, that's last upswing took you right into the 86.50 level, okay, which has been a major pivot in price. So you have a very good stop to trade against, and you're looking for 44 pips on the way down. You would have inevitably gotten that and more, okay? So, you know, these are the trades that you want to be excessively nimble on. I still think, like I said, sterling CAD might be a little bit cleaner, but I'd be weary on this one. I'd either want to see a trigger break here with a break of the opening range high for the upside to continue the longs, or a 40 break in momentum and a move below today's low for European trade. Get you back into the 84 handle. So I think this one's on the watch list for now, waiting for a clear break of the weekly opening range. So this one, the weekly opening range is very, very clear, 86.50 on the high, 83.75 on the low. All right, Jonas, hope that helps, man. Good luck on this one. I did like the broader setup as we were shorting it last week. Right now on these turns, I've become a little bit more hesitant, but we'll look to see if that Aussie weakness continues to carry this higher. Okay, last but not least, and of course, I'm sure we'll hear more about this on the headlines earlier today, the gold trade, which everyone seems to be so perplexed about, guys, has been extremely and exceptionally clean still. Here's a chart that we put out last night. Remember, 1237, 1236 was the targeted range we talked about since the start of the week. 1237 represents a 50% off the high. 1236 is the 2014 low week close. Within the confines of that same dollar and a half region, you also had this median line bisector off of the lows. Okay, we're pushing through this right now. Okay, and if we do clear this on a closed basis today, guys, you know, there's propensity for this thing to really continue higher. There's not necessarily any reason I think that we should be discounting what we've seen here in gold. The broader bias remained weighted to the upside above 1206 to start off the week. So here's the break and push, or we're trying to push through 1237, 1238. Today's close is going to be paramount. If we close below this level or at this level, yes, I would expect to see a little bit of a near-term pullback, maybe back into the 1220 region, or even as deep as this former trendline resistance. Remember on the report from last night, or the update, this is the bullish invalidation level for me near term. I can easily envision a scenario where we come right back, rebound off this, then move higher. But at the end of the day, as opposed to trying to play the shorts on this one, I'd rather be waiting for the pullback to get back on the long side. If you're trying to scalp it, this is what I've been focused on near term. Momentum continuing to hold here ahead of that 60 threshold. We haven't seen a 60 threshold break in momentum for gold since back here. Okay? And that was a pretty decent rally that took us close to the initial yearly high that we made in March. Prior to this was a pretty steep rally. So let's look at another example. Maybe that's not the best alternative. Something that looks a little bit more like what we're doing now, something like this. And here's the last time we broke 60 to the upside. Really nice rally. Let's go back and look further. Maybe this is just a freak occurrence on the last 2 times. Wait a minute. Here's the last time we broke 60 to the upside. That gave us a rally from about 1372 right to 1430. Okay, nice 50 pip rally there. Prior to that, here's a break above 60. Well, that was right into the 2012 highs. Okay? So just keep just keep that in mind, and we want to stay as objective as possible. So I'll be looking for sort of this confluence break here, close above 1237, 1236 with momentum above 60 is a clear signal. You're looking for 1248. You're looking for the 200-day moving average. Key resistance is way up here at 1262. Bearish or bullish invalidation is still that median line from the March highs of last year. Okay, 1236, 1237 is not just, you know, the confluence of all that stuff here, guys, but I also showed you this on the daily charts last week. So if you look at gold on the daily chart, there's 1236 or 1237. Okay, low week for 2014 close, or the initial first week close. But also look at the low that you caught back here mid-year in 2014, and the last stretch high that we made towards the end of the year also capped right at 1231. So objectively, if we close this weekly candle, by the way, this is a weekly chart, if we close above that 1236, 1237 level, this is your primary target. Okay? And so with this in mind on the weekly chart and the broader picture, it's not that hard to envision, guys, a scenario here on the near term on the daily where this thing gives you a bit of a pullback, stretches into that high, you know, we'll call it there. But long story short, you don't be too surprised here on a pullback to see this thing snap higher again on gold. All right? Still the cleanest of the commodities that we've been following since the start of the year. Any questions on the gold trade? All right. So, guys, those are the major setups we've been highlighting here on the intraday charts. As far as the swing trades are concerned, the sterling long is still in play. That is another one that had a beautiful entry earlier today. Here's what we're looking at with the British pound. Remember we talked about yesterday, guys, 50.84 is going to be the major support. I know it's a very obscure 88.6 retracement, but on a closed basis, don't think it gets much cleaner than that. Okay. Now, again, we're not saying that this is the low, that we're looking for 155 on sterling or anything like that, but propensity here is for us to see this thing give us a little bit more of a higher stretch. Like I said, Jamie, right now, today's high looks at 53 because that's where the median line is. But as the time moves forward, you know, you're going to want to bring down that target a little bit lower. And another thing that you want to keep in mind is this, guys. When we're taking swing trades, okay, and we're taking counter swing trades, or counter trend trades, which this is. You know, you're not going to, Jamie, you're never going to argue that this is a counter trend trade. On these, you want to be able to bring those slopes in on a daily basis. So every day, the initial target, if it hasn't been reached, gets brought down. When we're trading with the trend, it's the exact opposite. Okay, every day that the trade continues to hold within the formation, you want to bring down those limits lower because the propensity for the market to push into those further targets is with the broader trend. So make sure that you're recognizing when we're taking these positions, whether it's on the scalp basis or the swing basis, you know, you want to be a little bit more aggressive when you're trading with the trend, a little bit more nimble when we're trading against. So the barrier of entry for the shorts from here on out is still going to be 50.83. That's the rock solid support. It now confluences today with the median line off the December high. So that's the near-term bullish invalidation level. Okay, here's what the scalp looks like near-term for the British pound. All right, so that pullback, you got some CPI data earlier in overnight trade, much weaker than expected. That UK CPI print, guys, is a 15-year, or the worst read in 15 years, if I'm not mistaken, from my research this morning. A lot of people are asking, a lot of the reports I was reading were people asking, well, why would the pound rally on such a scenario? If the inflation outlook looks really, really weak, wouldn't that push expectations out further? Because the BOE is going to want to stoke inflation by keeping interest rates low? That's a good point to be made. I had a discussion actually with Chris Vecchio today, and he actually had a very good point. And in his opinion, what could be happening here, guys, is that the BOE is expecting that we'll see the depreciation we've seen in the pound filter into the economy. It usually takes about a 6-month lag time, okay, for a weaker pound to really start to materialize in more growth domestically. So the concern could be here from the BOE that if the depreciation that we've seen in the pound does take a little bit longer to filter into the economy, at that point we should see inflation metrics start to move higher, and they don't want to be behind the slope. Excuse me. Remember, the BOE is notoriously bad with targeting their inflation outlook. So, or there historically has been. So, at the end of the day, if we start to see that this weaker pound is filtering into their economy, and we see inflation starting to be stoked, they want to be ahead of the curve. And so, with that, expectations that we might see the BOE continue to ease or continue to keep those expectations for normalization sometime in the third quarter could keep the pound supported near term. Now, that's my fundamental, blurb there. At the end of the day, what's the trade, Mike? We're not here to talk about fundamentals and sensationalist topics. We're here to talk about what the trade is. I still think this thing has a base behind it with this rebound that we saw today. From a technical standpoint, what I need to see intraday is finally a pop above 60 and a break above the initial weekly opening range. That puts into focus the 52 handle, essentially. 51.93 was the high. Okay? So if you're not already holding longs, I wouldn't necessarily be telling you to jump in from here for sure, even from a scalp basis. But if you are holding a long, a break above that 51.90 level really opens up a scalp target into 52.50 initially. And for the swing traders, you guys are still looking for a run into that upper median line parallel. And right now, that's just above the 53 handle. Okay, but these are the levels I'll be focused on for the pound near term. Any questions on this? So on the daily chart, the medium-term chart, shorts are at risk into 50.80. Remember that long-standing 88.6 retracement. Near term, you really don't have a play yet because we're still playing within the confines of the initial weekly opening range, but a break above that 51.95 level really looks to target 52.50 first, this region here, and then right up into the 53 handle, depending on where we are in time. And 53.30 would be a major area of resistance as well. Half of the decline, 618 extension off the low. Questions on the pound? All right, so let's jump into your questions, guys. I see some great pairs here you guys want to talk about, so let's delve in. Okay. Jonas says, I'm actually short Kiwi CAD from 93. Kiwi CAD. Let's take a look and see what that's doing. Well, you certainly got the ideal entry. Bear with me one sec, guys. Let's just do some on the fly here and see what this looks like. Okay. Let me ask you this, Jonas. What's your target on it? Because I have you coming to support pretty close here right now from a scalp basis. All right. And the reason is this. There's a couple things actually here that are really, really neat. You probably saw me scroll out. This is this trend line is just insanely ridiculous off the 2009 high. It's been in play for literally 5 years, guys. You have one tag of resistance, two tags of resistance, three tags of resistance. A break and an instant tag of support really adds validity to the slope. Okay, so you had three tags of resistance, a break, test of support, little consolidation here before a breakdown. We tested it. It was the exact high that we made back in December, and the break high here shifting us to the upper side or the upper quadrant here of this formation. Right now, you're at support on two different accounts. A, it's the ascending pitchfork off the low that you made back in September. That's right there. And B, former trendline resistance off that March high. Breakthrough, test as support. So I would use some caution on that one. You had a great entry. I wouldn't get too aggressive. If we break below this median line on a close basis, you could see a pullback right back into 91.35, 91.50 is how I'd play it. But right now, this could be a break, test a support, and move off. As long as you're above that median line, I wouldn't want to get too aggressive holding shorts on this one, Jonas. Does that make sense, man? Great entry. Even from a scalp standpoint, ideal. I just want to temper your expectations on how far this will go in the immediate term. Let's see what it looks like on the scalp. I think I need my other charts. Okay, here is the weekly open. You can see I haven't updated this chart in some time, guys, so just bear with me. Put an extension right off the low here to see if we can get any projections on the upside. I think we had this on the daily chart, giving us that 1618. Really? You don't want to go to the top? There you go. Okay. Let's see. So the 100 comes in at 91.32. We've tagged that already and broke through. The 38.2 I don't really stress. We'll keep the 1618. Okay, so a little bit better of a picture here. So we had a soft target at 92. I'm going to go ahead and choke that up to the low for the week, 92.05 or whatever. Again, there's the median line. You want to use that as a target on short exposure. It could be a good long exposure with a momentum trigger. If here's a good idea for a possible near-term setup. So the weekly opening range got set yesterday, right? And remember, when we're looking at the weekly opening ranges, guys, it could happen on a Sunday, Monday. It could happen on a Monday all by itself. We're basically looking for the market to set a high, set a low, and test one of those highs and lows. Okay, once that's happened, you can have a little bit more confidence that the opening range has been set. This is a prime example of just that. You pushed into a high early on the Sunday, Monday open. You came into a low here yesterday, post-U.S. trade, and we're just within that same range. We tested the highs and it held, and the low is well-defined right above support. So on an objective basis, okay, this is the opening range setup. A break above 93.20, you're looking to get long. Invalidation levels right down here at 92. A break back below 92, you give it a short bias, the invalidation level is going to be 93. Okay, and that's the way we play these near-term weekly biases. And now a topside break, you know exactly what you're looking for. You're looking for that 1618 extension that basically takes you into a 94 handle. On a support break, you're basically looking for that major pivot that we broke through last week, and that takes you into 91.45, 91.35, same level that we're looking at on that daily chart. But Jonas, I just wanted to highlight this region for you right here, man. Okay, that for me is where the risk starts to happen for the shorts. If you break through this, I mean, if you come down here, you take off some of the table, bring your stops into the money, and you see a move sub 92, I'd hold on to that for sure. But at this point, coming into this region, shorts going to be at risk above the 92 handle. Hope that helps, Jonas. Great entry, by the way. Beautiful entry. And again, this is another position that offered a great trigger or what was this? This was early this morning. Okay, momentum divergence into the highs, followed by a trigger break I'll take that 9 times out of 10. Okay? Um, remember, when you're looking for divergence, guys, it's really important that we keep the line chart in view. Okay? You're not looking for the wicks. You're looking only to see if the close of that candle offered divergence, higher high in price, lower high in momentum. One other thing you do want to note that you'll not hear too many places is that the closer these divergence signals or the divergence reference points happen to 50, the stronger the signal. Meaning, if I get divergence up here, followed by a trigger break of 70, for example, that's not as strong a signal as something like this, where both divergence reference points are closer to the 50 median. The closer they are to the 50, typically, the more emphasis, the stronger the signal becomes. And remember, when we're talking about trend lines in general, I saw, Eileen, I think this is what you were talking about before. She said you had mentioned something about a couple of touches to an RSI trend line to enter, how to know to wait for the extra touch or miss the scalp. I'll go over that in a minute. We'll have to jump into a 5-minute chart. But, any trend line you look at, guys, 2 points is always speculative and 3 points is confirmed. Okay, it doesn't mean that a 2-point trend line is not going to give you a break or a play. It just means that the emphasis, the conviction you put on that is much less, right? If you have a third tag of the trend line, that's what validates that specific slope. So something to take note of there when you're looking for these triggers. But Jonas, hope that helps here on Kiwi Cat. He says, definitely, it's Cat, I know, haha. I mean, I'm not all that against the CAD. You know me and the Sterling CAD, right? We've been following that one for weeks now. Dollar CAD is what I'm really not interested in playing, but I think there is opportunity on some of the CAD crosses. For me, as far as the Kiwi CAD is concerned, I'm going to want to see, actually, if you bring this to a 764, it matches better. I'm going to want to see a break of the initial weekly opening range here on the Kiwi CAD. All right. Sticking with the CAD references, Sandy, great to see you in the room, Sandy, wants to take a look at EuroCAD. I'm short. Let's take a quick look. EuroCAD. EuroCAD, there it is. Okay. Before I start talking about EuroCAD, sticking with the theme we just spoke about 2 touches, Eileen, needed to validate any trend line, here's a perfect example. And this is, again, I've told you this before, but this is why I don't really like to use these long-ranging 2-point trend lines. Here's the low you made in 2012. Here's the low you made here in November. That break right there might have had a lot of people looking lower, right? Biggest fake out of the CAD crosses maybe so far. So I'm not going to really stress that. Momentum's holding above 40, so you don't want to turn over the entire trade just yet. Let me ask you this, Sandy. What's your target on that? I mean, you had an ideal entry at a very nice pivot, which was the 618 retracement. Near-term confluence almost with that 100-day moving average. Eileen says, I see it now with New York Times. No worries. Thank you. At the weekly pivots. So let's jump into the near-term chart. EuroCAD. This is a 5-minute. Okay, so you're looking for a move down into about 40.20. Okay. So obviously I haven't seen this in a minute. Let me put something together for you real quick. Bear with me 1 second, Sandy. We'll do some on the fly here and see how this looks. Yeah, it seems like we're putting in just this long, arduous bottoming processes, and that's exactly what a bottoming process is, guys. It takes time. It is not something that's going to be a quick V formation, although in equities it seems to be every single low. It seems to be just a V recovery. But as it stands right now, again, near term, I still think the risk remains to the upside. On the short that you're in right now, let's see what levels we can get for you. This could be the slope that you're working with. It's too early to tell, so I'm going to go ahead and put this as a dashed median line for now. I'd rather stress this initial Sunday high here. So we're going to go ahead and put that there. That trigger already gave out. So you're not going to be able to get a resistance trigger here to take you out of the trade, Sandy, just because the slope is so steep. I will, hardly ever use these types of triggers. They're just not going to pan out. You're just chasing stuff. So I don't necessarily have a trade or a trigger to get you out of the position. This is what I would say. Heading into the U.S. Open in about 10 minutes, watch this level right here. If you get sub 140.70, I do think you probably see a drop to cover a 50% retracement of the rally. And based on the daily chart that you're looking at, or based, I guess, on the weekly pivot that you're looking at, you're looking for a move into 40.20. I'd be watching this region right here for you then. Right around here. I just think as you get into like 40.35, you're paying 50% of that, you might see this thing give us a little bit more of a hold before you actually test the stretch lows. Your 50% is the W pivot? No, so the 50% is right here. The weekly pivot's right here at 140.20. So it's basically like a 15 pip range, Sandy. Does that make sense? She says yes. All right, cool. But yeah, I mean, if this candle closes here, it's the first sub 40 first sub 40 break that we've seen since last week. That break was a little bit more conviction because you had it actually moving below the weekly opening range low here already. So that break was well suited. You're still within the initial range here, so we'll see if this carries through. But that's the initial sort of barrier. Through that, I think you're open till 40.35 here. Hope that helps, Sandy. Beautiful entry. Again, perfect example, guys, of momentum divergence into the highs with a trigger break. Higher high, higher high, higher high on a closed basis, lower high. These two, very weak signal, right, above 70, very weak signal. Wait a minute, a third signal, that's stronger, okay? Followed by a trigger break. Even if you had jumped into the trade a little bit late here at 41.40 against 41.80, you're looking for about 35 pips. Boom. You're well more above that at this point. Sandy says, yeah, for me, simple pivots, or for me, pivot levels and 200-day SMA, always a good trigger. Right on. Right on. I mean, it gave you a really nice trigger up there. So looks like you're going to push through. Watch that 40.36 level, Sandy. Beautiful trade, my friend. Okay. I don't mind closing at 40.50, which is the weekly and monthly open if momentum does not follow. That actually might be a good game plan too. But watch that 36.40 level. You could possibly get a stretch into that region. Nice pivots. I mean, I'm not just saying that because it's the 50, Sandy. Look back in price, right? Catching the lows here on this decline, catching the lows of this region on this decline, on this rally here, just pips off the low. So this entire 40.36, 40.20 region, really nice area of support, former resistance. Okay, question here from DB wants to look at the DAX, please. Right on. Let's take a quick look at what's going on with the German 30. Where art thou, German 30? Ah, okay. So this is my first look at it this year. Let's take a look together for the DAX. It looks like the consolidation is breaking. It looks like the consolidation breaking. So this is the pitchfork formation that we left off last year, thinking could be in play. Again, just a disclaimer: I don't scalp this, so I don't, have necessarily near-term targets on it. But if this was formation is to be what we've been working on, one of the reasons we've been looking at this is just because the pivots we've seen along the median line here. That would be a break. Simple trendline resistance on a consolidation type of pattern gives this 3 tags and also validates it as a break. So with this thing, you need to see it close above this level as a disclaimer, but this would be a brand new, fresh high and a break of the January opening range. Okay, so the January open puts in a high pretty close to 98.70. You come in the second subsequent day, make a basic 38.2 retracement off the high. You go back, test those highs, and that really validated and confirmed the initial opening range for the month. So as long as we hold above 90, let's call it 98.50, I do think you look higher here in the DAX. Near term, looking for resistance right at the highs that you made both for last year and in December, or I guess mid-year and December, and that takes you basically 10,050, 10,090 region. Just want to see if this has any merit to it. Okay, we sailed through it a couple times, so I'm not going to stress it per se, and I'm going to remove this one since we're breaking that now. Let's look at this in an hourly. By the way, what you're seeing here, guys, is called session indicators. You can get this as an indicator that helps you attain the opening range for each session. It's called trade sessions, and it'll basically highlight each session around the globe here. So it makes it a little bit easier to readily identify the opening range for each session as we come into play. So, for example, as we open up your U.S. trade, you already have an opening range low of 98.55 and 99.55. So it's a cool indicator when you're looking to play the opening ranges on a session basis. And that one also could be in play. Look, any way you look at this, DB, any way you look at this, my man, you're looking for the highs. I mean, there's a confluence here now with the median line. Again, you have the highs from December. You have the highs from earlier last year. And I guess, I mean, if you really were looking to play this near term, you could take a basic retracement off the decline here to give you what the scalp target should be above here. But honestly, I think you really should be looking at the highs. See where the 88.6 comes in. Maybe 99.90, just ahead of 10,000. 99.93. Target's too close. I'd just be looking for the highs here and for that median line resistance. Sandy says yes. Love DAX. Bought it this morning. I mean, yeah, there's no reason not to, especially on a break of the monthly opening ranges. Sandy saying yes. DAX just pushed above the weekly R1. So, guys, a beautiful play is, we talk about a lot the opening ranges for the session and opening ranges on a day-to-day basis, but the monthly opening ranges are what our medium-term objectives really focus on. And for a trade like this where you've put in a very clear-cut opening range, I think you stay constructive above 98.40. We have to close above here today, but I still think you stay constructive above 98.40, 98.50. And the way I would play this is, if you're holding longs from this point, if you can bring them to break even, or if that break even brings into 98.40, that's where I'd have them. Break below this puts me neutral. Only get bearish if we were actually to break the downside of this formation. And even in such a scenario, if that does happen, you target this trend line here. If this breaks here, that's the short position I'd be playing, looking to stay constructive while above this line. Not bad. Not bad at all. So we did that. Permendra, Aussie Swiss, please, if possible, coming right up. Aussie Swiss, my friend, looks like this. Huh. Okay, so we never broke through that. This is the region I was focused on, 83.15 to 83.60. I think Jonas was asking about this last week. We tagged right into it yesterday, closed lower on the session, and that's the level to beat. So at this point, let's go ahead and clean some of this up. Wow, she is tight. Aussie Swiss. See what the intraday looks like. Focused on 83.60. Okay, so sorry, my trend lines got messed up here a little bit. These are the trend lines that we've been focused on. These are supposed to be parallels, guys. Sorry about that. Okay. So this is sort of the setup we've been focused on, and I don't remember if it was off the December low or the start of January here, but here's what the opening range is for the week. Yeah, I think this thing could turn over too. Again, on its face value, you made a very, very clear opening range high, opening range low for the week. You look for a break below 82.60 or a break above 83.60. At the end of the day, you're seeing momentum from overbought. I mean, for the last couple of weeks, overbought, 40 hold, overbought, 40 hold, overbought, 40 hold, overbought, 40 break. But look what's happening momentum here, now 60 hold. So suggest that near term this thing could be turning around. I'll be looking for a high here somewhere below this upper median line parallel. Initial targets would be right at that median line and the lower median line on a break. But I do think near term you're at risk for a pullback here in the Aussie Swiss. And momentum trigger there. We'll see if we can get a tag of. Yeah, pretty clean. Pretty clean. Hope that helps. Those are the levels I'd be looking at here for the Aussie Swiss. Again, if you're newer to the webinars, guys, don't forget you can always click on the camera in the right-hand corner of your screen here to take a snapshot of any of the charts that you see discussed here today to keep for your personal reference. So Permendra, I hope that helps on Aussie Swiss. The opening range for the week is pretty clear. That's what I'd be focused on. I wouldn't listen to any of this noise here on the downside. If you get the break and it does start to collapse and break down, a basic retracement off the lows is what's going to serve you best in a trade like this, where you're a little stretched here as you push the highs. Wow, that lines up ridiculously. There's 82.30, 82.35. You know what? We don't even need this anymore. And what's this level here? 82.02. Okay. That's going to be the low from October. Okay, so these are the levels I'd be working with actually for a scalp. I'll put this on the, I'll tweet this out on SB Squawk, but it's actually pretty decent. It's pretty decent. I'd be looking for a concerted break below the actual median line to get this thing going. If that follows through the break of the weekly opening range, that solidifies, in my point of view, at least a counter trend trade to the downside for Aussie Swiss. Not bad. Permendra, you're more than welcome, my friend. I appreciate that. So, guys, that's 9:35. We're over on time. I do want to thank everyone for their attendance here today. We'll go over, Eileen, guys, we'll go over some of those triggers again tomorrow. There really wasn't enough time here today to kind of drill down that deep as we looked into a lot of different pairs. But, you know, a quick crash course here, guys. You know, we're basically trying to focus on ways that we can ensure that we're not just jumping into a trigger based on what we're seeing happening in the oscillator, right? Price needs to confirm that same deal. So on a move like this, for example, this is a 5-minute chart for the Aussie. If you had missed the initial entry, remember, always be adjusting your charts. Guys, day to day, your charts should not look the same if you're scalping. Okay, if you're taking a medium-term trade approach, or you're a little bit more a wider time frame. This is not always the case, but for me, my charts are different day to day. As price action develops, so do I. There's a trend line right there, so right off the bat, any short exposure I'd be looking to be stopped against that level. Cool. Where's the trigger? Well, there's the trigger. Okay, you have a couple of different reference points. You want to see as many touches as you can. So this is how this trigger would have been drawn. Okay, prior to this rally here. So on this break, yeah, you absolutely don't have any conviction on a move like that. I don't know. That doesn't look like a concerted break to me. Price action didn't break anything. You do nothing. Okay? So even when the trigger looks like it's broken, a lot of times your best entry is on the tag of the reversal test of it as resistance. So that first trigger there, it looked like it broke. Price action didn't do much. We dilly-dallied again. We spiked into 60, so right off the bat, you're looking for a hold. If this is to maintain a downtrend like it did here, you want to see momentum hold. Well, now that we broke that trend line, came back, tested as resistance, that's the conviction. And even on a move like that, maybe you were still a little too timid, didn't want to take it. The reversal candle subsequent, you have a very nice stop target against the trend line, and you're looking for, you know, profit target about 18 pips. So that's an entry of which, you know, you would have been comfortable taking, even if you would have taken it at, you know, 55. 20 pips would have been well sufficed. It would have been pretty tight. But, you'd still be in the position right now looking to attain that 20 pip move. So this is obviously a bad example, guys, because the ATR is really, really tight. But I just wanted to show you these triggers. Again, on something like this, Sandy, 3 tags of a trigger after holding 60. Again, 9 times out of 10, I'll take a trade like this. The most important thing to note is this, guys. If you get the momentum trigger and you get price action following through, if the stop cannot be put an acceptable range away in comparison to the target you're looking to take, you can't take the position. You can't take the position, which is very frustrating for someone who's trading intraday. I understand that, okay, but I'd rather miss an opportunity as opposed to start chasing a trade that I feel like I missed the trigger, so I'm going to go ahead and run for it. Also, it's always better to sell into resistance and buy into support as opposed to selling a break of support. So a lot of times I get a question like, hey, Mike, we just took out, the Asia Pac opening range low. Momentum just broke 40. That's a trigger in your book. And absolutely, that would be a trigger. But if I can't put a stop in acceptable reference away from where we are, which we're looking for about 20 pips, this is well over 20 pips, I can't take that position. Okay, so make sure, it's not just looking for the trigger. That's not what it's all about. It's looking for the broader placement of where the market is. And if we can't make sure that those stops are going to be an acceptable amount, that's a trigger that you can't take. So that's just one example, Eileen, really on the fly here. We'll look at more examples here tomorrow, guys. Hopefully some more of these setups will be in play. Remember, as we get deeper into the session here, we'll be focused on the dollar-yen, focused on that sterling rebound, if that gathers any pace into the 153 handle. We're focused on the Aussie dollar to see if that finally clears the opening range as well. Gold, looking for exhaustion here, somewhere around 1237, 1236 with a breakthrough. Really looking for that stretch into 1248. Guys, we'll wrap it up there. I wish you all the best of luck trading, and we will pick it up tomorrow morning right here on SB at 8:30 Eastern. Best of luck trading, guys. See you tomorrow. Cheers.